Okay, we can go ahead.
Okay, so SMCI, let's just get that out the way first. They still have not filed. More than likely, if they don't file in the next couple of hours, they're gonna get delisted. There's no ends and if or but about that. My thing is, I don't think that they would allow that to happen, especially after coming out and saying that they were gonna file on a try like that they have every confidence to do it. The worst case scenario, of course, is that they don't file, but I don't think that's gonna happen. Instead, I think that they are going to either do an extension, um, or they're gonna do actual defiling. Now, there was a covenant that I was reading in their offering for their convertible debt, that there's actually a clause in there that they have until May 22nd to, to remedy any defaults. So we'll see about that. I don't know how accurate that is, but it's really bad if they don't report. So we're just gonna have to brace that volatility. I still have a good portion of my spreads for 2027, and I have a very small amount for 2025 that go until June. And basically that money is there. If I lose it, I lose it. I don't really care. I've already made money on this by downshifting. So any of the money that I'm risking right now is just profit anyway. So that's the way I'm going on this one, and just leaving it at that. The market right now is currently moving down primarily because of all of the negative sentiment around consumer confidence coming down, and that's primarily from this whole thing with Trump, announcing tariffs and then not announcing them and then coming back. It provides a really really bad backdrop for business leaders and also for consumers. Investors, no one likes to deal with the stress of every day waking up knowing that there's a guy about to crash the market, right? That's not what people want. People want confidence. Now, this could be part of the plan, of course, which is get everyone to kind of like back off a little bit on spending. If the consumer's not confident, then they won't spend as much money. And if they don't spend as much money, now you've got yourself a deflationary scenario. Same thing happens with businesses. If they're not confident, they're not going to spend money on hiring. They're not going to spend money on additional people. You know, these are the kinds of things that I think the Trump administration, either they're playing 4D chess or they're just really really stupid. I'm hoping that it's 4D chess, especially because Elon Musk is on the team, and so are some other Wall Streeters that understand that everything's a confidence game. I think the bond market actually recognizes this, and that's why we've been seeing this continuous drawdown on long U.S. On the long bonds. So if you're looking at U.S. Treasuries right now, they've been cratering for the last, I don't know, last month. It could be a sign of one, expectations that future inflation is going to be coming down, or people just going into safety. So we'll see what happens. As of today, February 25th, will second recover. I don't know what that is. What is that? What did you put, Billy? Okay, I'm gonna.
It's Grok. He like
Oh,
put something in Grok and got a response.
okay. So it doesn't matter. But in terms of positioning, I think right now we need to show a little bit of confidence. The market's already kind of, in my opinion, bottoming a little bit with a lot of the AI names. Nvidia tomorrow is going to be the main driver of whether or not we actually recover. Like everything rides on Nvidia's shoulders tomorrow. So if Nvidia gives a really positive guidance, I think the market is going to recognize that and say, you know what, we've got good opportunities going forward. If Nvidia craps the bed, we got some problems. But like I said, the market right now is in panic mode. No, this is where you have to really find great companies that are oversold and then buy them. I think right now my biggest conviction play is Nubank. I've said it for the last few days. I said I have a strategy. I'm naked in my Nubank calls for 2027, $15. And when the market wakes up, and it's slowly waking up right now, goes back up to certain norms, I'm going to sell $20 calls against it and pull most of my capital from that position and just let the profits ride and do its thing. So right now you can already see Nubank's recovering slightly. I just looked at the $20 call option on Nubank, and I think it's like about 122. Let me see. Hold on. Just double check. So I'm not giving you guys false information. It's about $1.29 right now. Like from what I'm seeing, it's $1.29, which is not bad. But my goal is to get to $2. If it gets to $2, I'll sell the $20 call against it. So hopefully that happens sooner rather than later. But we'll see what happens. Other than that, I'm just keeping my head on a swivel. There are some options plays that we should consider for 2027 in things that are more fixed income based. I think I mentioned on Amit's stream this morning, but I'll make sure I speak to you guys about it. Companies like Crown Castle and American Tower, they are agnostic to what's going to happen in the economy. So one of the great things about them is that they've had this channel of flatness for a while. So we can actually, probably buy it and watch as the TLT and as the interest rates start to come down. They should ride up as people start chasing yield. If you don't want to do the options, they're a great place to be to just buy the stock. Now, CCI has a little bit of an issue in that they do have a lot of debt maturities coming up next year. And the thing is, if they're not able to refinance at a attractive rate, they're going to end up having to sell their fiber division, which is already in the works. So that could impact future cash flows, but I don't know how that's going to impact the total share price. So that's something that we'll evaluate together, and I'll put some DD out soon, eventually. Other than that, just the market is just very uncertain right now. So whatever your high conviction plays are, right now is a good time to start looking at them and seeing if there's something that you can add that, and then hopefully it's something that we can all do good on. So there's really not a lot of places to look right now. The only things that I'm really concerned about is just Nubank. For those that are in the Brookfield preferreds, I know that they've been somewhat flat, but flat is good in markets like this. Okay? While other people are down 20, 30, 40%, those Brookfields are staying nice at the level that they are, and they're giving you a good return, a solid return on a annualized basis. So, being defensive a little bit by being into more fixed income is the way that we want to go, especially if we think that the economy is going to crater in the next 6 months. I do think that we're going to have a period of weakness, but that's something that we're going to have to evaluate on literally on a daily basis, because with Trump, you never know what the hell's going to happen. So, I mean, right now, supposedly Zelensky's on his way to the White House to sign a minerals deal that pretty much will end the war in Ukraine, which it's good and bad for natural gas at the same time. So we'll see what we can do about that. Do you have anything to add to that, Sam?
Yeah, top conviction buys for me are Amazon. For sure, I added to Amazon this morning near the lows, which is probably good, but I just added shares, added 10% to my position. I still have some cash left. I added small position to Axon. They actually report today after hours, so waiting for that one. I have a small position in Workday. That one reports after hours as well. I also have a small position in Lemonade. That one also reports after hours. So if any of those fall after earnings, I'm probably going to be a buyer. But yeah, I mean, this year, I think I've said it more than a few times, I'm sitting mostly in shares for a lot of positions. Doesn't really feel like it's 2023, 2024, where things are going to continue going straight up. And to be honest, the only reason why I sit 80% in long-term holdings and 20% in trading, if I do the trading, is because I don't have an iron stomach for volatility as much as other people might. So that's why that's just how I position myself. I mean, everyone's pretty different. So, everyone has different risk tolerance. People have different goals in mind and so on. For me, I think I'll get a little bit of edge from the trading side, but I've been steering away from trading lately, only because I don't like to trade during uncertain times like this. I think you could probably, if you're a very good trader, you could probably figure out the levels and everything. But like to be honest, I'd rather focus more on the long term stuff at the end of the day and find more like medium to long term plays, if anything. But I agree with Chris. Right now, I already did my buys for Nubank after the earnings drop on Friday, and basically the buys were just buying back some short term calls that I had. So I'm naked in quite a few, but I am still keeping part of them in spreads, not going totally naked. But again, like these are 2027, so we do have a lot of time for that, and I do think there is some value in Nubank. But it is a growth stock, so it's going to get hit in this macro environment, whether we like to or not. And even if something's down, doesn't mean it can't go down further. So just be vigilant. When you do add to certain positions, be prepared to add more if it goes down, and be prepared to stomach more volatility. Nothing says that that it will definitely bounce here for sure. The probability is pretty high on these levels, considering we're at the 100-day moving average on SPX. And I mean, I would have said that we're already on lows in terms of fear and sentiment greed indicator, but we were already in the lows about a couple of weeks back. So, I don't think this has really been such a great indicator lately, and I haven't really timed anything based into that indicator. But it does provide more favorable conditions to buy for a long-term hold. Now, catching a falling knife with like short-term calls is very risky today, in my opinion. I mean, as long as you size right for it, I don't want to dictate how that game is played because I'm usually not good at those. But my eyes are set on certain names, and that's what I'm buying. I'm not planning to catch any falling knives with certain positions that are a bit more risky than others. Like for me personally, HIMS is more risky to buy here than it is to buy Amazon, and that's by a wide margin. But I do still have my core position in HIMS. I rode that thing all the way to 70 and rode it all the way back down here. The trims that I've done in HIMS were like around this level to bring it down to a core position, which is all in profit. So similar to what Kris is doing for SMCI, I'm doing the same for HIMS. Like this is all literally just a profit position. So wherever it goes, I don't care. If I am going to buy HIMS, it'll probably be in the low 20s or teens. And some people could say, hey, that's never going to happen again. But I mean, guess what, man? Like anything can really happen in this market. Just because the fundamentals look good, it does not mean the valuation is still going to stay up there. And HIMS, by all means, that report yesterday was really good. I didn't necessarily like the contraction of the gross margins. That was one of the reasons why I bought HIMS, because of its high gross margins. Those gross margins are contracting down to 77%. Meanwhile, though, the revenues are accelerating very quickly. The guidance for next year is actually next fiscal year is actually very good. But the valuation expanded very quickly in a very short period of time. So nothing ever goes straight up. HIMS could probably bounce here and then go back to all-time highs. I mean, if it does, that's great. I still have a position. If it goes back down, then I'll wait for it to add. But I'm going to be pretty patient with that one. What else reports? We got a lot of software stocks starting to report starting tomorrow. We have Snowflake reporting and NVIDIA, of course. I don't know why they always do those on the same day. I don't know what Sridhar is thinking, but I mean, he's going to gun it. Who knows? Maybe Snowflake saves the world and NVIDIA doesn't, but I highly doubt Snowflake's going to do that considering they're less than $100 billion market cap and NVIDIA is $3 trillion. Tesla, I mean, I've been pretty vocal about that one. I was trimming my position hard and pretty much sold out of most of it in the high 400s. I did add a little bit in shares around the 330 level. I'm looking for probably like high 200s to mid 200s, but it really depends on the sentiment. Like if Amazon goes below 200, I'd rather add to Amazon instead of Tesla. So, I would say going into this, and I think I've said this before, like have your list of companies you're looking at during times like this, before these times occur, so that when they do occur, you're not just like buying the dip on the first thing you see. You want to put your money more toward conviction, because nothing ever says the market can't go down further. We can get sold from even oversold conditions, and we've seen that. Like the market just continues to go down, and it's better to buy things that you have high conviction in versus buying something where you think it might go up more than, let's say, Amazon. Like if we bounce hard, there's a really good chance that Tesla and HIMS are going to bounce way harder than Amazon. But if we go down more, then those other two will probably go down more. So I'd rather have my money in stuff that I have high conviction on, but also, the volatility tolerance and the beta tolerance is something you need to be acclimated to as well. If you could stomach high volatility, then by all means do what's good for you. For me, I cannot stomach high volatility, and that's the reason why I'm more leaning toward long term when it comes to that. But yeah, I mean, definitely not a good day in the market for a lot of people. Consumer confidence, like Kris said, came in pretty low this morning, way below probably the miss on it was as wide as 2021, and we haven't seen crazy misses on consumer confidence since that time. So, it's going to throw the market off. But I mean, we'll really see. I mean, Nvidia does report tomorrow, and I'm not so sure how they're going to perform. Like, I can't, like, just because Nvidia is going to report good numbers, it does not mean that the market's going to come back. It'll help, but if the market's going to sell off, it's going to sell off regardless of whatever fundamentals it's on. So, just keep that in mind.
Man, it's 4 o'clock now. Let's see. Let me refresh the website real quick. Nothing yet. Latest filings. Let's see. Financials, SEC.
Looks like
Nope.
Workday is up 2%, so that's good news. They named a new president for product and technology in Workday, so that's good news. And they just gave away their gains.
So Workday's down.
No, it's still flat. I think it just reacted off some news, and the earnings are still being released. So, I mean
Okay.
that's more of a long term one for me. So I don't have any option plays in that one. I did, but at the time I sold it for Nubank. That was like a couple of months back.
Yeah, this year is just going to be really freaking difficult for everyone to deal with. All the uncertainty that's out there and what essentially the goals of the Trump administration is going to be to basically how to get inflation down without causing a market crash. That's basically the goal. Um, yeah, and we just have to kind of like survive and figure out how to make money in the meantime. And one of the ways that we could probably do it is just being on the defensive side and just being in defensive names. But I'm not so sure that that's where we want to be right this second. So I'll like I said, I'll do my due diligence, make sure that we're all aware of what's going on. And if we need to get into defensive mode and just stay in defensive mode, we'll do that. You know, Trump is very, very attuned to the market. Basically, he understands that his what is that called? His approval is going to be based on the market. Right now, his approval rating has been crashing. So if you look at his economic approval rating, it's literally like crashing every day. So eventually, he's going to have to either come up with some bullish things, or he's going to have to release like a press release or something that jolts the market back into some to a little bit more favorable conditions. So we'll see what happens. I think right now for me, I'm gonna remain long on on CCL and NCLH. Both of them are gonna benefit from rate reductions. And right now, you can already see the long bond coming down. They were able to favorably refinance some of their debt down, even without the Fed intervening very much. So both of those companies, they have a lot of potential to keep running higher. So whoever's got those spreads, just hang tight. Don't do really much. As far as the people who have TFC and Verizon leap spreads, just chill with those. You don't have to do anything. Google, I've been adding to my position because I think Google is very undervalued. Every day that I look at Google, I just see constant news coming out that their cloud is expanding further and further. So, I think eventually that data is going to present itself in their numbers, but we're just going to have to be very patient while that happens. So, yeah, that's pretty much it for now. There's really not much else to cover. Oil, natural gas. Venture Global is due to report in March, and we'll get a clearer picture from there. For me, I've just been adding DCAing into the position. This is a highly, highly profitable company with great growth prospects in the future. Right now, the market is not recognizing it, but that's fine. I'd rather the market not recognize it and let me get these deals early on. For me, this is going to be a 5 to 10 year hold. As more and more of their LNG trains come on, the more and more they're going to be able to sell capacity, and the more money that they're going to be able to get as cash flow, and the lower price that we buy it is going to be great for future returns. So if you're in, these companies like Next Decade and Venture Global for like a very short term, I would say reconsider your position. But if you're in it for the long haul, this is a great place to be to get future cash flows. Especially if you're in if you're bullish on energy. And I think for me, natural gas is the future. Everything that I'm seeing right now pretty much tells me natural gas is the way that you want to be for the next 5 to 10 years. And these guys are going to be somewhat insulated from commodity shocks here and there, especially next decade, because most of their stuff is already, in export deals for spas. On the other hand, Venture Global has more spot pricing. So that could be an issue later on, but it's nothing that's going to tank them. The other thing is both of them are capital intensive businesses, which means lower interest rates end up benefiting them tremendously in the future because any debt that they have, they can refinance at lower rates. And, all that spread that you get between profit and debt repayment, that grows, and that money can be returned to shareholders in the form of either share buybacks or cash flows. There is a dividend that's going to be sent out in March for Venture Global. It was already in their SEC filings. I didn't see that in their S1 when I first ran through it, but someone corrected me and I did take a look and it's going to be there. And I think that they have every intention to maintain that dividend and possibly grow it in the near future because they are generating cash from two facilities right now. One facility that they're going to be commissioning like fully, so they're going to be getting cash flow from that. And then on top of it, there's another one that they've already started in the process of commissioning, so they're going to be getting credit from that. So both of those facilities are going to be generating cash flow for them. So I don't think it's out of the realm for them to issue a little bit of dividend income towards shareholders. So yeah, and I think that's it for now. I don't know if there's really much else that we can go over. So let's see how
So Workday beat non-GAAP EPS at $1.92. Revenue beat estimates. They're up 15% year over year. Subscription revenue is up 16% year over year. And it looks like guidance is, I believe it's in line, and they are up 10%. So actually, no, 7%.
okay. All right, guys, I gotta head out, so I'll talk to you later. Sam, if you want to stay on, by all means, stay on. But yeah, good luck, everyone. Hopefully, we've still got until 5:30 for SMCI to file. So if they file by 5:30, we're gonna be real happy tomorrow. If not, we're gonna be pretty sad. So let's just see what happens.
Does
Have a
anybody
good
have any
one.
questions before? Okay, I think that's it. I will post the recording up on YouTube as soon as possible. Thanks a lot, guys.
All right, take care, guys.